So we're starting off by having a look at the weekly time frame. This has been elongated all the way to August. Let me correct that. So it's nice and symmetrical. So as we can see, you've been in a decline before you've had a retracement. And this is the weekly time frame. Remember, guys, we've had a retracement and we've tagged buy stops at recent highs after you've had high, low, high, low, high, short-term low, low, high, low, 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 high, high, low, high, high, because we tagged and we traded above recent highs there. The overall trend is obviously down, and it will be expected for price to continue to the downside. But before we do so, fishing the upside could be something in the works within the next couple of weeks. So I will monitor that and keep you guys updated. For this week's price action, what we've seen is the weekly range trading within the prior week's range right there. What's funny about this is we never got to tag 2020, 12020 again, nor did we reach even down to the consequent encroachment of this weekly candle. What I am expecting is, or what I'd like to see is 12020 tagged and a decline into, just adjust this, a decline into this weekly bullish engulfing candle with this area 11721 or 11721 in the cards. Also, this last down close candle before we saw a continued push in bullish price action. So if you guys have a look at the daily time frame, look at the highs, the dealing range high, dealing range low, and then we tagged and we took those highs out right there. That was last week Friday. Monday we opened, we gapped lower, we closed below that Friday's low. Following day we opened, we gapped lower, we failed to take the prior day's low out, and we ran and closed above the previous day's open and high, but we failed to take out the 12020 region. And obviously Thursday took buy stops ever so carefully, took sell side out, which is the daily range. So this would be great if you're intraday trading and trading inside of the open high, close low, open high, close low of Friday's candle. And obviously the Friday we have traded inside of the Thursday's open high, close low. So what I would like to see is a spike above 120.24 and then a continuation of a decline down into at least 11819. I'd like to see that being the first area of interest, but we've got relative equal lows down below here. So the first point of interest would be 11907. Second point of interest would be 118.19, and then we'll get down to the liquidity volume right here. Liquidity gap. I called it a liquidity volume. I was thinking of volume imbalance. This is a liquidity gap as there is a gap that has been traded into, but we never closed inside of that range. We swiftly traded above that area. So that area would still be considered as an area of interest if price was to continue to the downside, because we do have an imbalance there, and obviously we have a liquidity void that has not been respected, especially when it was trading above it. We never got the spike to that area there. So we obviously have the 116.16 area, which is the the equilibrium from the high time frame, swing high to swing low. So we're currently trading in a premium on the macro time frame. So if we were to see a decline 11616 as a long-term projection, so maybe something going into the next 2 weeks, would be something to look out for. If you head over to the 1 hour time frame, Monday we opened, traded in a discount, sold off, took out prior short-term lows, rally, came back down, high low, shifting market structure. We didn't make it to the equilibrium point of this candle. I mean, if you also take into factor the highs and the lows, probably. So we did. For the candle bodies, no. But for the full week, we traded into the equilibrium. We rallied higher, we traded above into a discount for the week. Remember, this is the highs that we're looking for. Never go. For the highs, gap, gap. So the highs there, important. Double top. Shift in market structure. Order block. Respected shift in market structure. Fair value gap. Look at that wick. Look at that. Probably an 830 or 930 candle. 830. Create the imbalance. Perfect. Tagged. You'd obviously place your stop a few ticks above. Bow. You're aiming for liquidity below there. We got them. This is the bond market, guys. Okay. Coming towards Friday. Friday. High, low, high, high. Sweep. One more time. Gap in the market. Sell off going into 8 to 9 o'clock open. Lows. Just remember we opened there, right? We sold off. So I'd like to see this full range taken out before we drop lower and aim for these discount rates here. I like to see all of this range here taken out. A full range right there would be perfect. Or something like that. And then something like this.